Welcome to another S&P 500 analysis. Today is November 7, 2020. Remember the three patterns I have described in my election night edition of S&P 500 analysis video, and also the two key price levels that I suggested to keep an eye on? In this S&P 500 analysis, we will review the pattern that the S&P 500 has formed and analyze it to establish some possibility on where it will go from here for the near term. From the previous week S&P 500 analysis video, we noticed the up-down volume and the daily advance decline did not agree with the price action, and that led us to suspect the smart money was buying into the sell-off going into the US election. And as it turned out, they didn't even bother to wait for the election to take place before they rallied the market. The S&P 500 gap up 4 consecutive days last week. Only on Friday it closed with a loss of minus 1.01. From this weekly chart of the S&P 500, we see a wide range bullish candle coming back up to near the top of this megaphone channel. And the range for this week was 249 points. The S&P 500 gained over 239 points or 7.3% for the week. And it is only 2.2% or less than 79 points from the all-time high. The 10-week moving average and the 40-week moving average are flattening, but the weekly candle put in a higher low to form a one-time framing up and close above the 10-week moving average. This put the S&P 500 back to a weekly uptrend. Let's look at the sentiment and the market internal before we analyze the price action of the S&P 500. Starting with the VIX, we saw it came back down into the neutral zone between the 20 and the 30 level, after it has elevated up to the 40 level in the prior week, and it closed the week at 24.86. And on the put-call ratio, we saw it came back down from an elevated rate level near 1 at up above that 0.9 area to under 0.75. It ended the week at 0.6. So these two sentiment indicators are telling us the market participants are not fearful and they are not overly greedy but are bullish. And the New York Stock Exchange up-down volume shows strong buying on Monday, Tuesday, and Thursday. The buying was concentrated in the tech stock on Wednesday, and we saw more down volume than up volume for a day. The S&P 500 was up more than 2%. On Friday, the up-down volume ratio was minus 1.06, almost even, and the S&P 500 closed almost unchanged. It was only down a little bit over a point. And the New York Stock Exchange daily advance decline also showed a broad market rally on Monday, Tuesday, and Thursday, but not on Wednesday and Friday. There were only 354 more advancers than decliner on Wednesday, with the S&P 500 up over 2%. And on Friday, there were more decliner than advancer. Although the S&P 500 closed almost unchanged, it showed there was some profit taking on Friday. And we finally saw some expansion on the New York Stock Exchange new high, new low from last week's rally. On Thursday, there were 146 more new high than new low. It's not great, but it's getting a good start. The New York cumulative AD line did not show any divergence, although it seems like it. Now let's look at the NASDAQ market internal. The NASDAQ up-down volume was a mixed bag. Pretty strong buying on Tuesday, Thursday, but only modest buying on Monday, Wednesday, and Friday. The NASDAQ daily advance decline also showed broad market participation for Monday, Tuesday, and Thursday, but not much for Wednesday. And on Wednesday, the advancer only outnumbered the decliner by 403, with the NASDAQ gaining 497 points or 4.4%. And on Friday, the decliner actually outnumbered the advancer by 843, while the NASDAQ gained 13 points. So you can see there are some negative divergence going on internally. The NASDAQ new high, new low did expand a bit. On Thursday, there were 213 more new high than new low. And the NASDAQ cumulative AD line showed a slight negative divergence on Friday. So overall, the VIX and the put-call ratio are telling us the market participants are somewhat bullish with a bit of caution. And other than Wednesday and Friday, last week's rally was pretty broad-based, came with strong buying. But Wednesday rally lacked the broad-based participation, and Friday the S&P 500 took a pause, and there was some profit taking. Now let's analyze the S&P 500 price action and see what it did and where it might be headed next week. But before I begin, I need you to smash that thumbs up to help me promote and share this video on YouTube. And if you are new to this channel and find the contents to be useful, don't forget to subscribe. Thank you for your support. Now looking at this daily chart of the S&P 500, we noticed there have been 4 consecutive gap updates since Monday of last week. And then on Friday, we said earlier that it paused a little bit and it formed this pennant pattern that we spoke about on election night to say this is one of the patterns that we're keeping an eye on. And as you can see, it formed it perfectly. So right now it's kind of a little bit suspicious because when things are looking too good, then we could be full into what we seems to looking at certain things that is obvious. So the obvious is a lot of people are looking for a breakout from this pattern. But what the internal might be telling us to be, let's wait and see, and we might see a little bit of a pullback down here to possibly fill this gap near 33.89 and bounce around a little bit before it make a push up. So if also the other thing is if I put a Fibonacci retracement on here using this swing, last week's swing, and then we could see that there could be a pullback somewhere around 50% at 38.78, which is coincide with this gap here near this gap. So we could see a little bit of a pullback to the 50% before we see this S&P 500 resume its upward move to test the all-time high and possibly put in a new all-time high before the end of the year. So in the near term, the scenario is on the downside, basically looking for this thing to come down, test 33.89 and see where we get a bounce back up. And if we do not see a bounce back up, then we'll continue to watch for it to pull back to 33.30 and fill this gap. Then we'll be looking for a retest of the lower channel of this pennant somewhere around 32.50, somewhere around there. Yes, 32.45, 32.50 area. So that's the scenario that we will be keeping an eye on for next week. Now, if we go and take a look at the other market indexes, you look at the NASDAQ 100, it also shows a similar type of price action. You see that it broke out of this pennant formation here and this pattern, and also it got 2 consecutive gap up last week, and we got a little bit of a hangman type of a candle. So we could have some indecision next week and possibly a pullback just like S&P 500 and pull back to the 11,846, fill this gap and see would it get a nice bounce back up and go for the all-time high once again. But this seems to be a little bit too shallow of a pullback, so we might see the NASDAQ 100 actually come down and fill this gap here down at the 11,356. So we're going to keep an eye on these 2 gaps for the coming week on the NASDAQ 100. And if it doesn't get a bounce on either one of these gaps, then we'll be looking at the bottom of this pennant, the trend line here, for potential support. And that would be somewhere around 11,100 area. All right, so that's the NASDAQ 100. And looking at the Dow Jones Industrial, we see the Dow Jones Industrial forming a different type of pattern, a little bit slightly different. Essentially, we're still forming a flag, but it's more of a channel than a pennant because it did break this low here and got a nice bounce off of it. And also we did see a nice move and got a little bit of a pause on Friday. And there's still a little bit more room for it to come up before it bump up against this trend line here. So we wouldn't be surprised to see the Dow Jones a little bit outperform the other indexes next week sometime and bump up this trend line before it come back down and possibly retest the 27,000 area to fill in this gap. And it might even come down all the way to this lower channel line here and fill the 26,639 as well. And for the Dow Jones Transportation, I basically have shifted the supporting trend line down a bit, but there's a gap here that it could come down and fill next week near the 11,281. But if it decides to continue to push higher, then we're essentially looking at this all-time high at 12,013 area for it to go back up and retest. Now, if we break this trend line, doesn't get a bounce off of this gap, then we're essentially looking for this thing to come down to these pivot low near 10,922. And the Russell 2000, that's kind of interesting. I got two channels here. One is this big long channel, right? And it is sitting inside this channel, it's moving up. And then there's another shorter term channel, is this right here. And again, they both basically pointing upward. And we're basically looking at this 1698.90. That's the next potential resistance if the Russell 2000 continue to push higher. And if it decide to pull back, then once again, we're basically looking at this 1610 to get retested and possibly get back into this level here, 1572, fill this gap and also coincide with this trend line here on this long-term channel, this supporting trend line. So those are the major market indexes, and let's take a quick look at the spiders. And what I did is I also put the composite volume profile for last week's price action. And as you can see, the point of control is up here near this 350 area, the point of control. And you can see also put in the composite for the last couple of days on the spider. And you see there is a nice balance area here. So the possibility is for us to come up to the 352 and then get rejected and push back down to the lower level of this balance area, somewhere around 347.65. That is the one of the possible scenario for the spider. But since we are looking for a pullback on the S&P 500 cash index, so I do expect it to come down and test this 347.65 and continue to push downward and come down to this 339.50 for a potential fill of this gap here. So that is the downside scenario that I'm looking for the coming week. And the upside is to push higher and move above this value area high at 352 and push toward the all-time high. So in summary, we saw some broad-based buying last week, and the up-down volume looked pretty good for majority of the rally last week, and the advanced decline also looking strong, and the new high, new low is starting to show some small expansion, which is encouraging. But I think the market have got a little bit ahead of itself on the post-election and going into the election rally. As you can see from the S&P 500 chart, we saw consecutive gap up day. So it's time for the market participant to kind of take a breather, and probably we see some money will come off the table, basically a little bit of a profit taking, and also come down and fill these gaps here and give the opportunity for those that have missed this rally to come back in. So by no means that this is the top or have reached the top on this cycle here. I do believe that we still could see a new all-time high on the from the S&P 500 and the other major market indexes such as the Dow Jones Industrial before the end of the year. So I will just be a little bit more cautious and look for a dip and see if the opportunity to get back in on the long side if you did not participate in the recent rally. And if you have substantial gain, then I would definitely possibly consider tightening up the stop just in case we get a little bit of a reversal. Thank you for watching, and be sure to smash that thumbs up for me to help me promote this video on YouTube, and stay safe.